Are you tired of overcomplicating your trading strategies and spending hours glued to your screen? What if I told you there's one simple 1-minute scalping strategy that can help you become consistent in the market without any stress, without any confusion? In this video, I'm breaking down step by step my easy to master, quick and effective 1-minute scalping strategy that works for everyone. Whether you're a beginner trader or a seasoned trader, trust me, this is something that you want to watch till the end, because I'm not only teaching theory, I'm revealing the exact tools and examples you can use to start trading this strategy effectively from today. So let me jump straight into the rules of this strategy. For this 1-minute strategy, we are going to be focusing on the 15-minute time frame and the 1-minute time frame. We are going to use the 15-minute time frame to do our analysis, and then we're going to jump to the 1-minute time frame to execute our trade. Now, what are we waiting for? I want you to go ahead and open your charts at 9:15 a.m. New York time, Eastern Standard Time, 9:15 a.m. And then I want you to spot out swing highs and swing lows in the market. Let's say this horizontal line is my 9:15 a.m. line. What I want you to do then is I want you to mark out the closest swing high, and I want you to mark out the closest swing low. That is all I want you to do on the 15-minute time frame. Open your charts at 9:15 a.m. and then mark out the closest swing high and the closest swing low. When you've done that, I want you to drop to the 1-minute time frame, and we are going to wait for a sweep of either the high or a sweep of the low. Now, how that looks like, let's say we have that high over here and we have that low over here. This range is just this zoomed in, okay? Now, we have price consolidating, and let's say we take out the high. That forms a bias because we have taken out buy-side liquidity on the 15-minute, and we're anticipating a short-term reversal on the 1-minute. It is important to only start trading at 9:30 a.m. Okay? Then we are waiting for a change in the state of delivery, which is going to happen as soon as we close through the series of up-close candles that took out liquidity. We are going to wait for the market to give us a change in the state of delivery, and then what are we going to do? Then we can take our entry on the retest of the order block. Stop loss goes above the high, and we can target a fixed 2R trade. That is how easy this strategy can be. So let me run over a bullish example. Okay, in a bullish example, we are opening our charts at 9:15 a.m. Let's say that is here, and then we go ahead and we mark out the swing low and we mark out the closest swing high. Then we go ahead and we drop to the 1-minute time frame. That is when we go and we mark out, we have this range from the 15-minute time frame. Now we are waiting for price action to then take out the low. Now we are waiting for a change in the state of delivery to confirm the market has turned around into a bullish program. A change in the state of delivery will occur when we close above the series of down close candles that takes out liquidity. That is going to happen when we close above these down close candles. So we wait for the market to close above the down close candles. We simply place our limit order at the retest of the order block, and we take a 2R trade. That is all we do. It is very important to note that your trading has to happen before New York session closes at 10 a.m. That is the only rules. We wait for the 9:15 a.m. candle to close. We mark out the closest swing high. We mark out the closest swing low on the 15-minute time frame. We drop to the 1-minute time frame, wait for a sweep of either side. We wait for a 1-minute change in the state of delivery. That is all we wait for. And then we take our entry on the retest of the order block and we target a fixed 2R trade. Guys, this is all you need in order to become a consistently profitable trader. Are you looking to trade alongside me live on a daily basis where I share my exact analysis? You see exactly my positions as they unfold in the market, and I share my entries, my stops, my targets, everything. I'm a 10 plus year market veteran that's a full-time trader, and I've made multiple six figures from trading alone. Trading is my full-time income, and I've been in this game for a very, very long time. And I guarantee your profitability. This isn't just another run-of-the-mill course where you get a video lecture and that's it. This is a step-by-step mentorship where I walk with you on a daily basis. I help you with your trading psychology. I help you with your backtesting. I help you with your trading refinement. And I help you build a model that fits you. And I also teach my personal trading model that's taken me years to figure out and that has achieved a 75% win rate and with a 2-to-1 reward to risk ratio. So if you're looking for a no BS trading mentor guide, I highly recommend that you sign up for this course before the prices increase at the end of December. We are running a discount for 10% for the lifetime access, and 2025, mark my words, will be creating a lot of millionaires out of this course. Prices will increase coming in the new year, so make sure you jump on this opportunity before it slips away from your hands forever. So here we have our first example on GBP USD on the 15-minute time frame. Remember, we go from the 15, we mark out the closest high and low, and then we drop to the 1-minute time frame. Here we are on the 9:15 a.m. candle, open and close. The very next candle is the 9:30 candle. That is the candle that we want to trade. Remember, all times are UTC -5. As you can see here in the corner of my screen, this is New York time. So we have this candle. This candle runs through buy-side liquidity, and we also have sell-side liquidity. We want to trade the most recent liquidity sweep in the 9:15 candle. Now, that is when we drop to the 1-minute time frame to trade the 9:30 a.m. candle. Remember, here we have our liquidity rate. I'm just going to remove sell-side to make it clean. Now, here we are in New York session. 9:30 opens in the very next candle. What do we have? We have consecutive up-close candles that took out liquidity. As soon as we close below the opening price of this, that will form my order block. Now let's play price forward to see what happens. 9:30 opens and we form this order block. So very easy, very straight to the point. You take an entry on the retest of the order block. Stop loss goes at the high or above the high, and you target a fixed 2R. That's it. That is how easy your trading should be. We can see we get tapped in on the very next candle, and if we let this play out, this market runs through, giving us a nice 2R trade for the day. Going back to the 15-minute time frame, we can see that we go above, we manipulate the high, and we close back through the range. Let's see if we can create a 15-minute change in the state of delivery, which will confirm lower prices. Does the market close below? We fail to close below, and we run higher. That is why it's important only to take 2R off, everything off at 2R. Here we have our next example on GU on the 15-minute, and we can see that we come to the chart at 9:15 because at the close of this candle, the candle opens that we want to trade. We mark out the closest swing high, which is this swing high. The market has run through it, so we are expecting an expansion going into 9:30. Now, we drop to the 1-minute time frame to look for our conditions. Here we see we have that sweep of liquidity. Let me just mark this out so that it becomes valid. We have that liquidity rate, and we have 3 consecutive up-close candles that takes out liquidity. What does this become? This becomes my order block. So I can go ahead and I can mark out this as my order block, and I can take a trade on the retest of this order block. Stop loss goes a couple of pips above, 1 pip above, and we target a 2R. That is how easy this strategy can be. We get tagged in on 9:30, which we should get tagged in, and we let this thing play out. We have a little bit of drawdown, but ultimately price runs lower and hits my take profit. Here we have a next example. And this example, I'm going to share something else with you. So well done for sticking around to the end of the video. Now, we can see that we opened the chart at 9:15 a.m. The previous candle took out liquidity, which is perfectly fine. We need a liquidity sweep before 9:30. So now that is when we drop to the 1 minute time frame. And let's see how price action unfolds. We have this liquidity rate over here. And where would our change in the state of delivery be? We have these consecutive up close candles. So our change in the state of delivery is going to be all the way up here. And that will make our idea valid. So we need a candle closure in the 9:30, past 9:30 above this. And we take an entry on the retest of this order block. Remember, a change in the state of delivery is just the formation of an order block. Now, the New York session finishes at 10 a.m. So this is what we have left of our window that we can still take a trade in. We simply take an entry order on the retest. Stop loss goes all the way below the low because this is our protected low. And we target a fixed to our trade. But we have such a wide stop loss that this trade might take a while to play out. So this is where patience comes in when it comes to trading. We get tagged in before New York closes, and we just let this thing run out and play out without interfering. The market takes a while to get to our take profit, but hopefully we get there eventually. I'm going to go to the 15 minute, let this thing run out, and there we go. This market eventually runs up and stops and hits our take profit at 1 p.m. New York time. We have an example on NASDAQ. We are at the charts at 9 a.m. We have the swing high that price action traded into, and we also have this swing high resting above. Now, the next candle is the 9:15 candle. At the close of this candle, that is when we would expect to take a trade in the following candle. Now, we don't trade into this high, so I can go ahead and remove that. But we do trade into this high. Now, we can see that the 9:15 candle gave us a bearish reaction off of this buy-side liquidity pool. Now, I can drop to the 1 minute time frame to expect a continuation. But look at what happened. We have had already our change in the state of delivery. That has already taken place. Here we have our liquidity rate. Now, in order for the trade to be valid in 9:30, we need a new change in the state of delivery. So we need this market to come and take out liquidity and then give me the change in the state of delivery, which will then give me my entry. Let's see if that happens. If that doesn't happen, prices just continue dropping and we have reached the close of New York kill zone. So this setup doesn't always present itself on one asset. That is why you trade multiple assets when it comes to trading. You can trade 1 to 3 pairs per strategy, and that is what I do recommend. Guys, I hope you enjoyed today's video. I hope you found value. I hope you learned something. If you're looking to trade alongside a market professional with almost an 80% win rate, I highly recommend that you check out the mentorship program before the prices increase. That is not a joke. The students are having a lot of success. The prices will increase 2025. So make sure that you grab the 10% discount in December before you miss your opportunity to sign up at the lowest cost. I hope you enjoyed today's video. I hope you have an amazing rest of your week, and I'll see you guys in the next video.